Hi student, welcome to Radhakrishna Tech. Today we will discuss about the trading and profit and loss account and balance sheet account. And this is a sum which we'll be discussing about in our today's video. And this is basically we have taken it out from NCERT's class 11 textbook. So there is a solution for this account in the same books, but we will discuss line by line items how this has been treated and where this is nothing but your trial balance. The trial balance data. So how we will, by this data, we will able to understand how the financial statements has been prepared and where these items has been pushed in financial statements and what basis and other items we will be discussing on this call. Okay. The first thing out, the first thing first. So I have here a copy. I have three accounts here. One is your trading account and one is profit and loss account and another one is your balance sheet item. Okay, so here we have all these data, all the trial balance data as of 2017 for this account. The first item, so we will discuss about the first item. You can see here it is in a first item, carriage and goods purchased. So usually what is a carriage and goods purchased is nothing but your transportation expenses. So it will come in trading account. Why? Because trading account is an account where all your direct expenses, direct labor, and direct purchases will come and fall it. All the expenses and opening stock, closing stock, all these line items will be coming under trading account because it is just an it is account where their operating expenses will not come into the picture. For example, if you're now you are a manufacturer of a chalk paste, you think. So chalk paste requires some sort of cement or some chalk powder. So that is a direct raw material that you'll be purchasing. So that expenses will be incorporated in trading account. For other expenses, for example, you will purchase some sort of additional uh, um, administrator job, or for your company you will pay a salary of admin expenses or some advertisement expense. All these are comes under operating expenses, which will not come under a direct trading account. Okay, trading expenses. So first we will see carriage on goods purchase. So this is the transport expression which are directly linked to your linked to your product. Okay, so first this will come under your trading account. So we will type it carriage. Okay, so it is an 8,000 rupees. So we can strike this out. So you just striking it. Okay, 8,000 is done. Or you can do this is done. So next, carriage and goods sold. So carriage and goods sold is an operating expenses. Why? Because and this is an selling expenses. These are incurred for your sales. So sales you for you have already manufactured a product. Now you have to sell. But selling is not so easy. So you have to use some certain strategies, and you have to advertisement marketings. You have to give the sales commissions, vice versa, and many other things, and also includes the transportation from your one place to another. You have to take in the product and you have to go there and sell it to them. So such kind of things are operating expenses. So carriage and goods is an operating expenses. So 3,500. So it is coming under profit and loss account. 3,500. Okay. So that we will strike out this also. So now next the third item here it is manufacturing expenses. Now manufacturing expenses is just it's a direct expenses to your manufacturing the product. So it will come under your trading account. So now we will go to manufacturing. We will type it here, manufacturing expenses. Or else we will do one thing. Okay. So whatever coming under trading account, we will put it under highlight. So we will put it under what? Yellow. Okay. So manufacturing expenses will come under your trading account. So we will put it. So advertisement. So advertisement expenses your indirect expenses. So it's an operating expenses. So we that should come under profit. Operating. So it's an advertisement. So it is 7,000. So this we will use it in green. Okay. All your operating we will use it in. So next item we can tell what is your next XIOT. It is an operating expenses. Sorry, excise 6,000. So it is basically it is an operating. We put it in a green column. Sorry guys, this is not correctly. Okay, I will just factory lighting. So this is a direct expenses. Why? Because direct it is where you will produce a product in certain factories or some other main places. So that is directly related to your product. For that you are expense some for your lighting. So that is a direct expenses. So we will put it in the factory lightings. So why we are doing this? So why we are splitting all these things is because we will have to know what is our gross profit, what is our operating profit, and what is our net profit. What are the items will come in the balance sheet, and what exactly our balance sheet is telling whether we have made a profit or loss, or how much our assets values is there, whether the liability is more than your profit or something like that. Okay. So factory lighting, how much you have? 4,400. So this is what? This is a orange item. So data. So this is a balance sheet item. Why I'm telling data is nothing but your customer. So yeah, sold as yeah, why it is sitting here in trading in your trial balance, because this is an asset which we have to customer has to pay to us. We have made a sales on credit basis, so say we have to receive a money from our sales from our customer, right? So this is under data. So this is asset account. So for asset, what we will give, we will give it in blue. Okay. So for this, I have used here, so you can asset. I'm randomly doing it. Data's 80,000. So next item, creditors. So the debtors is what? Customer. Creditors is what? Our vendors. So we have to pay them. We have taken some certain services or material from them on a credit basis. So it is sitting under as a creditor. So this is a payable from our end. So we have to. This is a liability. For liability, we will mark it as surrender. Okay. So 61,000. This what we can tell. Yes. And you have 61. So the next item we will see. Next item, what you are telling. Next item is dock and clearing charges. Right? Dock and clearing charges, what you can tell. Dock and clearing charges, nothing but your um, custom duties charges. It is a the particular completely it is a terminology used under the taxes, and this is completely is related to your product. You maybe imported your product, and you have for that import you have incurred some charges for that. So this is directly your trading charges. So you have to put it under your trading account. Doc. Right. So for trading, we have kept it as an orange. So we will take it as an, sorry, this color. So we will take it. Postage and telegram. Postage and telegram is nothing but your operating. So you are not any. This is admin charges. So it is completely comes under your operating expenses. 800. Fire insurance premium. This you can see, for example, this they are considering, if they are mentioning something like fire insurance premium for a factory, so it will go under trading account. Fire insurance for office, then it is coming under operating expenses. Okay, nothing they mentioned, so we will assume it is for the whole operating as well as trading. So we will consider as an P&L item, operating expenses, so we will put it here. So what we'll do, 3,600. I will mark it at one shot. Okay, then patent. Wait, first I will mark it up. Hmm. Green. It's like green. Dimensions. So next patent. Patent is nothing but your you have made some technology, you have created some technology. So for that you have taken a patent. Um it is your asset item for you, and this will be there are some schedules which will be amortized year on year. You will be amortizing, and it will be coming through as an expense item. Okay. Now patent is in your asset, so put it under asset. Patent 12,000. So now what you're gonna do here is, um, this is your asset, right? So I'm just taking sample. So next the item is income tax. So you can consider income tax as an expense also here. Or you have to make the payment, or you can consider it as an income tax payable. So at the end of my year, I'm going to pay this much tax liable to the income tax department. So I'm showing in my trial balance. So it is a liability to me. So I have to pay to the government. So it is a liability to me. So I will consider this as a liability. Okay. I'm marking it as underpaid. Office expenses. They mentioned directly office expenses. So it is nothing but your operating expenses. Office expense 7,400. Okay. Office expense nothing but your green item. So you will put it under green. Okay. So this side of expense all we have completed. So I'll do this also. Carriage and goods sold is in a, we are consider it as an operating. So I'll put it under operating. This 8,000 we are considered as trading account, so we will put it under trading sector. So nothing but your orange color, orange highlightation. Styling. Okay. So we consider these items, whatever there it is in an orange item, it is all your trading account. Whatever your green item, it is all your operating account. Whatever it is in blue, that is your assets, and whatever it is in red, that is your liability. So by this, see, instead of one by one putting it, or we can do while writing out or by doing our calculations in books or somewhere, you can just analyze first and put it and mark it accordingly. Then transfer all these numbers to respective accounts and close it off. That will also will be an easy way to do it. Okay. So next we will do next column. Next we have. So the first item is cash in hand. So directly cash in hand means what? Our asset. So just put it directly cash in. Or else I will tell you we can do how to transfer this set, okay? One by one. Instead of one by one, we can transfer directly. Cash in hand, what is it's your asset. So just put it your asset set. Just mark it as an asset. Okay. Bank overdraft. So overdraft, you have taken a loan from here. It's a sand type. It's just a bank overdraft is nothing but it is a liability to us. So we have taken a loan from the bank. So it is telling us an overdraft. So we have to pay to the bank. So it is a liability to us. So it should be under liability liability, right? Just mark it as under right. So motor car, you have purchased an asset for your company. So motor car may be used for many purpose, for office purpose and anything. So it is an asset for us. So you mark it as an asset. Drawings is your liability. So this is a proprietor company. So he is taking some amount from your company. He has invested capital, right? So he has to take some out of his capital. So this amount is considered as a liability to the company. So you can consider as a liability. It's simple. Just mark it as an audit fees. So now audit fees is what? It is an operating expenses. So for every year you will audit your company. So for that you have to pay you to your auditors. So that is a return and expenses. So that is a P&L item. So you just mark it under P&L. So what is your P&L? It is a green item, right? Just mark it. Next, plant. Plant is nothing but a asset for us. So go to asset. Plant is nothing but it is a factory or big. You will see one big machinery is processing all the things, water or any other. In a chemical sector industries, you will have a big plant of manufacturing like the pesticides or some others in particular section of your unit. So that is called as a plant. Okay, so it is an asset for me. So you just mark it asset. So repairs to plant. So plant asset. So repairs to plant. So for this plant, you are making some repairs to this, and it is an operating expenses. So you can put it in the operating. This is a P&L item. So next, what P&L is nothing but your green, right? So just mark it on the green. Stock at the end of the year. So nothing but stock is nothing but your closing stock. So you have a chalk piece, you're manufacturing chalk piece, you have it 1 lakh chalk pieces at the end of year. So this is a closing stock of that value. So that value will be considered as an asset to us. So it is nothing but your asset. So just mark it under asset your blue item mark. Purchase less return. So this is nothing but your purchase account, trading account. So why they're telling is, see, some of the product they will be giving you purchases minor, and they will mention some items. It is a return of the purchase. So what we will do, we will mention first, we'll write purchase, then we'll reduce that value and we'll show a net of value of purchase. Here they are given directly, so you can use it. This is a trading account. Purchase to manufacture product or any sale or any services. So that is for that is a trading account for us. Trading is nothing but what we have mentioned. It is an orange item. We just put it under orange. Yeah. Commission on purchases. So you have made you have purchased some materials. For that you have made some commission for that. So it is a directly relating to your purchase, which isn't directly related to your trading. So it is a trading account. So the next item we will be discussing on commission on purchase. Okay, so commission on purchasing is nothing but the expenses you spend on the purchasing of your purchase items, raw materials or any services which are directly linked to your manufacturing of product, manufacturing the product. So in that case scenario, this is a direct expenses, so you have to include in your trading account. So commission on purchase. So I'm just typing here. It's 20,000. It's 2,000. Incidental trade expenses. So it is just an this is the operating expenses. You can consider this as an operating expenses, and it will go under green item. Yes. So your total cost incidental trade expenses. So it is coming under profit. So your profit is nothing but what you can see in profit incidental 3,200 rupees. So the next item is investment. So investment nothing but your asset. You are investing something in your in any other asset. So that we'll consider as an asset. So we will put it as an investment. So that is for 30,000 rupees. So investment is under blue dot. So go just type it in. Okay, interest on investment. So interest on investment is not in your. So now you have to see something which are related to your earning. You have sold it. You have a chalk piece business. You are selling it. You are earning it. That is your revenue, direct trading revenue. But interest on investment, you are investing on gold, stocks, or some other businesses that is not directly related to your business. So it is it's not an operating expenses. It is an other income. So that will be under what? P&L. So you can tell, you cannot consider this is an operating expense. This is an it is after your earning, after your taxes, interest, everything. So you can consider this as an interest on interest in P&L item, interest on investment, 4,500. So that will go under yellow mark. So just mark it out your yellow. So next item you can see, or directly you can one by one you can close it off. Capital. This is nothing but your liability. Capital is your liability account that the business, it is a liability to the business. So you have to pay your proprietor who have invested it. Right. So capital 1,00,000. I mean 1,00,000 rupees. So it is under red. So it is, you have to give it right. So yeah. Sales less return. So after sometimes you are making the sales and you are giving some discounts, and then you are making some, then you are receiving the payments. So something like that. Usually what will happen, sales will put you after your discounts or sales return product will minus and net sales ratio. But here in this statement, they are given directly. So you can mention sales less return 5,20,000. So this is a trading account. So trading will go to hello, right? I think I made a mistake. So interest on investment is not a trading account, right? But I use the trading symbol. So instead of that, you can just delete. Instead of that, what we have given for them is green, right? So you can mark green. Yes, marking it to this. Just corrected it. And the next item is sales tax paid. Sales tax paid is your expense account. So it is an operating expenses, not directly linked to your mm, sales account to trading. So you are just it is an operating expenses, sales tax paid 12,000. So it's green. You can mark. So discount allowed. You are giving in a sales discount. So it is in a P&L item. So you can use it as a green item. So it's not directly linked to your trading account. So you have to give it a discount allowed to P&L account. Discount allowed. So this. So what will happen? 2007. So discount allowed is what? You are allowing a discount. So discount on purchases. Discount allowed we will discuss. I'll give you complete scenario on discount allowed. So next is discount and we'll discuss on discount and purchases. So this you are making some purchases and you are getting discount on purchases means you are paying some 15,000 rupees you think. So your vendor is giving it 3,400 discount to you. So it is what? It is a profit to you, right? So in that case, if it is a profit, it should be a credit item that will be here on credit side on P&L item discount on purchase. 3,400. Now, someone is giving me a discount on purchase. I'm entering it as a credit. It is a profit to me. It is some sort of other income. So I'm booking into credit. It is not an expense. So I am giving someone and I am allowing a discount to some my customer, then it is in a loss for me, right? So if it is a loss, what is your golden rule says? Debit all expenses and losses, credit all incomes and gains, right? So now debiting. So debit means this side, debit of the entry. So discount all over 2007. Got it. So if purchase is my profit, then in loss is my expense, right? So it is in debiting. Purchasing, I'm putting in credit side. Then my discount, what I should allow is in debit side, right? So that is it. So I'm putting a total over here. Okay. So now all the figure is done. So this also I will highlight it. So it is better what you do is first you analyze the transaction individually. So carriage in, okay, you can mark it or you can, if you don't have a color, you can just type it as P, T, B, anything. Or liability means L. So once it is done, you can transfer these numbers into your respective account and you can calculate. It will be very easy for you, and it will help you to analyze where you have missed it, or cross checking. Any verification will be helpful for you, whether you have accounted or not. Okay. So now we'll do the now the fun fact is that we have to, our assets and liability should match. So whether we have done the correction, whether we have done the sums correct or not, we will check. So now you have 520, and so if it is an always, see, if your expense is more than your sales, then it is a loss. If your sales is more than your expense, then it is a profit, right? So my profit, what is this? This is called gross profit, directly linked to my sale of my product minus my manufacturing of that product. So 520 minus 61,600. So see, this two is matching. So you can give one checkpoint also here. So it is 0. So this gross profit should transfer to your profit. So it is in debiting. Now it is a be credit entry. So it is a transfer entry. So transfer entry will be gross profit carried down, or you can tell brought down. This is carry forward. This account is carry forward. This is brought down. This brought getting link here. So now you have 46,300. So what is the net profit you have? 46,300 minus 46,000. All your expenses, all of these expenses minus all of your this income. 4,20,000. Now you have to bring your net profit. But one check you have to give it. You know there isn't drawings here, right? But drawings we have given here. They have not shown it. So it should be reduced out of your profit. That's what we thought we will do it. So if you see here drawings is there, right? 8,000 rupees. Minus 8,000. 1 lakh investment, cash. Okay, sorry guys. One thing we did. Startingly, we have all these expenses, we just mentioned it, right? But we didn't transfer this line items here, so only it is not getting matched. Now you can see I'm just transferring all this in the, okay, cash in hand. So what is your cash in hand? How much you have? 2,500. Bank draft, bank overdraft, 30,000. See, it's we marked in red. All reds are now drawings also. Drawings we should reduce, right? So we will reduce out of our capital. So motor car, 60,000. Then plant, 15 million. Then we have what we have, stock, closing stock, 76,000. Right. What we are left, replace the next items, these items, right? We have not mentioned all the P&L items. Cash we considered, bank overdraft also we considered, motor car we considered, drawings also we consider, audit fees. So I'm inserting some of the line items here. so that you can understand. See here, um, audit fee 2,700, repays to plan, repays to plan 2,200, because the repays to plant is done for the man, it is an P&L item. So whichever directly related to manufacturer product that are into your tradings. Other than that, all are operating expenses. You have to put it in P&L items only. Okay, this is done. Now we take it out this. Now 46, 300 minus 50. So I am bringing my capital to my liability. So it is a payable. So now if you see, still there is a difference. We have to find why that difference is coming. Then that is a fun part. I mean, missed out some of the items, so we can check and we can do it out, right? So the fun part is missing out is I didn't include 1,60,000 of purchase less return commission also here. Incidental trade expenses and included on, then included it. So we'll see. Improve. So purchase less. See, now I missed it. I'm coming to know what I missed it. Because this entire line item, what I thought is I will mark it, then I'll transfer it. But later I from here I just started transferring, but above items I didn't transfer. Okay. So 1,60,000 I'm putting it. So next item, one more item also is there. Commission on purchase. Now commission on purchase I included it. Now my this amount will change, right? See 520 minus 221,600. So my gross profit got down 298,400. So now this minus 5,900. Total of all this. Okay, total of all this. So still have 48,000 difference. Why I'm getting a difference? We have to see. Did I missed everything, or do I am considered it or not? This. Okay. We'll see. First, we'll see one by one. Okay. Then only it will help us. Carriage done. Carriage we have 8,000 done. Carriage and goods sold is there. Manufacturing is there. Advertisement is there. Excess duty is there. Factory lighting is there. Data's 80,000. It is there. Data 61,000. Yes, it is correct. Dock and clearing charges. Dock and clearing charges. Yeah, it is postage. Correct. Fire insurance. Correct. Patents 6,000. 12,000 patents. It is correct. Income tax 24,000. Correct. Office expenses 7,200. Correct. So fully this income tax. Why I'm telling you. The difference between income tax, I assumed that income tax is a payable, so it is sitting as here. But here it is not a payable, it is actually paid. That's why you are getting the double difference. So instead of showing your how we show for sales tax paid, same way we will show it as income tax. So this is an expense. It is already incurred, already paid out for that particular year. So 24,000. So my total minus 24,000. If I am removing this out, balance is matching. So simple, right? Drawing is also I'm reducing out of my capital. So it is my capital right now is only 92K, but I'm showing it is negative. Instead of showing like this, we can do one thing. Minus 8,000. This item I can remove it because capital plus drawings. I can mention this. Or you can insert one more column and put it in amount. So here we can show the calculation and we can bring the net of amount here. So if we see here, your assets and liabilities are getting matched. So basic thing here is you have to segregate whatever it is available in your trial balance. You have to segregate correctly, or else if you're not segregating, if you're putting it and totally you're getting also, it will match. But during the examination, they will consider what is your knowledge on particular expenses item, whether it is in a direct expenses or indirect expenses. If it is a direct expenses, it should go to trading account only. If it is indirect expense, it should go to all P&L item only. So you should not mismatch it. Then they will ask us what calculate the gross profit. When you're calculating gross profit, all the direct items only should be considered there, or else gross profit. It is not a corrected gross profit. Okay. So anything else? If you have any comments or anything, if you have any queries, you can comment me on in my page. So I will reply to you guys. Okay. So this is completely a studio for to learn the accountancy as well as tax. So thank you for your patience, and please subscribe and click on this notification. Thank you very much.